Altria, ticker MO, missed bottom line consensus, but actually beat on the top line for Q2 2026. Revenue, net of excise taxes, came in at $5.36 billion, which narrowly beat the $5.35 billion estimate. But, adjusted EPS was 1.48, missing the 1.50 consensus.
Right, and management actually raised the lower end of their full-year EPS guidance, moving to a range of 5.61 to 5.72.
Which is usually a good signal.
Exactly. But despite the revenue beat and that raised floor, the market just reacted harshly. I mean, the stock plunged roughly 9% down to around $68 right after the report.
Yeah, imagine hitting your revenue targets, raising your financial floor, and then, boom, watching your stock instantly tank 9%.
It's brutal.
So looking under the hood at their traditional cigarette business, I just keep picturing someone squeezing a shrinking sponge, like they are wringing out higher margins, but the actual customer base is just steadily evaporating. Is that underlying dynamic what sparked the sell-off?
Yeah, that tension is absolutely the core of the market's reaction. If you look at the smokable product segment, I mean, profitability is still massive, but the mechanics behind it are what you really want to watch.
Right.
Adjusted operating companies income, or OCI, actually grew 2.4% to $3 billion for the quarter, and margins expanded to 64.8%.
Wow, almost 65%.
Yeah, but they aren't achieving that through unit growth. They're heavily relying on aggressive pricing power on their premium brands, mostly Marlboro.
So they're basically just jacking up prices to offset the fact that, well, fewer people are buying traditional cigarettes because reported domestic volumes fell, 3.2%?
Yep, or 4.5% if you adjust for inventory movements.
Right.
Now, while they are technically outperforming the broader industry, which saw a steeper 5% decline, the market is calculating a very grim countdown. Investors are essentially doing the math on how much longer Altria can hike prices before consumers simply can't or won't pay.
Especially with the macro environment right now. I mean, CEO Salman Kuso noted that inflation and gas prices are heavily squeezing adult nicotine consumers.
Absolutely.
If you're paying more at the pump, you start trading down from those premium Marlboros to discount brands, that dynamic directly threatens the pricing power that's propping up that $3 billion profit engine.
It does. Though they did get a lifeline from a somewhat unlikely source. Stricter FDA enforcement against illicit flavored e-vapor products has actually moderated that traditional cigarette volume decline.
Wait, really? The FDA crackdowns are helping them?
Yeah. By pulling illegal vapes off store shelves, the government is inadvertently forcing a segment of users back into combustible cigarettes or, legal alternatives.
Right. But because they know that combustible market is still a shrinking sponge, they're being forced to spend a fortune building a smoke-free future.
Exactly. And you can see that massive price tag actively dragging down profits in their oral tobacco segment. Adjusted OCI there dropped 8% down to $158 million. They're seeing severe margin compression because of the heavy capital investments required for the national rollout of a new product line called ON, PLUS. So it looks like they're essentially buying market share. I saw overall oral shipment volumes actually dropped 8.5%.
They did, yeah. But the ON brand itself actually expanded its retail market share to 8.6%.
Right. So mechanically, they are subsidizing the retail price to get those tins onto shelves, bleeding cash up front for long-term customer acquisition.
They're paying a high premium just to guarantee a foothold in the future market. And, I mean, that's not the only cost they're absorbing.
Oh.
Yeah, they're taking a $180 million restructuring hit to consolidate their United States Smokeless Tobacco Company, or USSTC, manufacturing facilities.
Man, if you're holding Altria stock for the dividend, this is where the numbers should make you sweat a bit. I mean, they boast a 6.2% yield, which looks incredibly attractive to retail investors.
It does, but it comes with an 88.7% payout ratio.
Yeah, returning nearly 89% of your profits to shareholders leaves almost zero financial wiggle room.
Exactly. You are trying to fund an incredibly expensive, necessary transformation of your entire product line with just pennies on the dollar left over.
Which leaves you with this fundamental question to mull over. Can Altria's aggressive pricing power on that shrinking sponge of traditional cigarettes outlast the highly expensive uphill battle of funding its smoke-free future?
Definitely something to watch. Make sure to follow the show for your daily earnings coverage.